Welcome to The Real Money Show, the number 18778 Silver, the website guildhallwealth.com. My name is Jeremy Wiseman. I'm joined by Jerry Correia. And at Guildhall, we offer only the highest quality gold and silver bullion products. That is 1 ounce gold bars, 10 ounce gold bars, kilo bars, 100 ounce silver bars, kilo bars of silver, 10 ounce bars, and of course your maple coins for ease of liquidity. You can acquire it direct with Guildhall. You can also have it stored in a vault facility. Again, make sure that it's secured, insured, ease of liquidity, and of course in registered accounts where you actually own your own physical precious metals. There's a lot of new vehicles out there that are offering paper. They're offering an investment, which means there's a counterparty risk. They're offering you an equity. That means that you don't own any of this physical precious metals. That's like having an insurance policy. Mm-hmm. That's like investing in an insurance company instead of actually having an insurance policy.
That won't work.
That's what it comes down to. Now, it can work sometimes. Sometimes it's, you need it as part of a portfolio, maybe that additional additional liquidity that you might need. Maybe it's, I can only put in $2,000-$3,000 and I can't yet afford a 100 ounce bar. Maybe it's something like that. So there's reasons to have these type of things, and not everything is bad per se. But what we're offering at Guildhall is the ability for clients to actually own their physical gold and silver. Now, why is that important? Because as you're going to find out today as we go through the show, there are so many good things happening in the gold and silver market that you don't want just exposure to the market. You want to actually be able to impact the market by stacking and having your own supply of gold and silver. And we believe that owning it directly is going to be the best way for you to capitalize on this bull market that's happening right now. However, Jerry, I want to bring you into the conversation. Before we get into the whole nitty-gritty of all the good stuff we're bringing to the table this week, gold's up 58% this year. Silver's up 78% year to date. These are the U.S. numbers. I'm sure there's a lot of people that would look at it because I believe that there is a bias to the 100%. I've doubled my money, 100%. So the bull market must be over. How much more can I get if silver's up 78%? Mm-hmm. At 100%, I'm done. I got to get out of this.
Got to take profit.
I got to take profit. It can't go any further because it went up 100%. What do you say to that person who looks at this market and says, "Oh, look, it's already at all-time highs. Forget it. It's reached its peak."
You got to reconsider this. I mean, this is not a financial trade. We're not dealing with a trade here. We are stacking, as you said before. We're stacking real assets, real things. They're a rush for real. We're rushing for real news. We're rushing for real food. We're rushing for real stuff today. And this is the move. We're seeing a reset of the financial landscape globally. You need to understand what's happening. The rearranging of the deck chairs has happened already. Things are already in place, and what you're doing is you're now diversifying, number one, away from currencies that are helping to support and act as a temporary Band-Aid, because that's a temporary thing that does not work. The new solution and the new opportunity is in real physical hard assets, real physical precious metals. That word precious means that they're monetary. And as we are going through a monetary shift, you want to shift with it, and very easy to do. You convert out of your fiat with Guildhall. You give us a call at 18778-SILVER, and you jump on this silver stock out. Because there is a converging of fundamentals at play, where silver was once known as just an industrial metal, is now being used in monetary, is now being used for its once relied on monetary attributes. It's revisiting that, and now gold doing the exact same thing, going into the industrial space. But demand is bypassing the normal common narratives, the financial narratives that, okay, the metrics are saying we're oversold, we're overbought, or the yields are this. It's going beyond that. Gold and silver today does not require interest rates up or down. We're defying that. It's strictly based on demand.
It's going beyond the paper.
Yes.
Right? It's going beyond the paper analysis, right? It's more than just the paper world of money, but also the paper analysis of the market itself. It's about the physical. So let's get into all things physical, Jerry. Well, I guess let's talk about the financial markets before we get into the physical, because just before we jumped on air, you were saying that we've reached that things are happening in the market that appear to match what we saw with Lehman Brothers.
Right. So this is a big kaboom moment this morning. Now, this is the breaking today from the U.S. Office of Financial Research. You can check this out yourself at financialresearch.gov. They have just exposed, and we are all shocked to learn that off-exchange repo markets, which is the dark pool repo loans, is now exceeding $5 trillion in the overnight market. This is over 100 more times more than expected. And this could definitely do what had happened before during the Lehman crisis and Lehman Brothers. And what this is actually quadruple that. We saw this being the very source of the problem, the Lehman Brothers collapse. We saw this just before the rounds of money printing before the COVID lockdowns. The COVID lockdowns and the money printing stimulus, I mean, we use that as a guise of, we actually don't look at the repo market. We need the stimulus checks for COVID and, research and helping the avoiding reality. But basically what's happening is these short-term loans, these repo loans, are backed by bonds that can amplify systemic shocks and liquidity issues. Margin calls and domino bankruptcies are happening worldwide right now. So you're seeing the overnight repo market, which is liquidity. And now you're seeing also the yen carry trade. And the yen was used pretty much to finance everything in the world, from Bitcoin to real estate, from e-commerce, because Japan was told to keep rates really low, even negative, so we can all borrow.
And now those rates are rising, so you can't borrow it as cheap. So the whole system that was based on that is basically imploding.
Yeah.
So where do they find the liquidity now?
The highest since 2007. This is a
Does
detonator.
that explain the repo market? $5 trillion. Maybe it's banks looking for liquidity. Who's lending the $5 trillion that's going in every week?
These are banks to banks sloshing money around left, right, and center.
They're the ones lending the money.
Yeah.
That's the $5 trillion.
Correct.
Okay.
Yeah. So it's very short term. These shadow banks.
Where are they getting that money?
Now, you know what? It's a lot of money printing, Jeremy. This is what's happening. It was already revealed that the repo markets and the Fed had to print over $128 billion last month, and this is going to continue. So as the currencies are being destroyed behind the scenes while you're sleeping in the guise of secrecy, this is what's happening to your currency. You're now holding fiat currencies that ultimately fail and they lose their purchasing power. And you know what? What solved the last crisis was more money printing. But this time around, the money printing won't work because the collateral is shot. The world is looking for better collateral, but we know what that is. If we look far to the east, silver is being used as collateral in Indian banking systems. And now even Russia reported that their gold activities, in gold and lending and borrowing and pledging has actually improved the bank's liquidity over in Russia. So what's going on in the West? Why are we looking from the outside looking in? What's happening on the outside, we're revealing. What's being revealed is the solution that gold and silver are high quality liquid assets that will come to the rescue when the liquidity crisis happens. So you need to hedge right now for what's happening and get prepared with gold and silver reval coming.
So if I'm following you correctly, what you're kind of saying is yen carry trade is part of a financialization. We're going to borrow cheap money to buy these other assets, and then we'll leverage those and sell those, and we'll get our carry trade on all of that. And then when it comes to the repo market, it's demonstrating that there's a lack of liquidity. So all of this is sort of seizing up on the system. And what's seizing up is the world of financialization. I believe that's what you're saying.
That's what's happening.
Now, the answer to that as well can't be
more financialization.
We will have another John Paulson moment, and he goes to Congress and says, we need $1 trillion plugged into the system or it's all going to fail, right? Because at the same time, you have all these other countries around the world saying, well, we're going to unplug from that system so that we're not a party to it. It's no longer a global system. It's a localized system. And so they don't care what happens to it.
That's right.
So it is, in some ways, very troubling for financialization. And yet when we look on the other side of the page or other side of the field, we see nothing but examples of precious metals and actual stuff being used to protect against financialization.
Exactly, and we're seeing this clear display right now. Actually, this week, what was breaking was the European Union and India bypassing the SWIFT system. And I thought this was key because as we've been following the global trends of silver imports, India year over year broke their own records from 300% up to 500% world record silver imports. And they're actually revamping the banking system away from the SWIFT. So the European Bank has entered a new territory by moving to link its target instant payment settlement system with India's UPI network, marking the first time the EU instant payments infrastructure has been directly connected with a BRICS nation. Why is this important? Because the BRICS are leading the charge away from the over-financialization, which ultimately discredits the mass population, the very poor.
I mean, it discredits the money.
Discredits the money at the same time, which leads to distrust. But they've created a golden corridor all across Africa, into Middle East, into Asia, into Far East Asia. You have a corridor of gold, and now we have a system where we're using real stuff, real gold and silver, real trade, real trust, away from the old. So the old financialization, the old solutions won't work, and we're excited to know what will work. And the foundation of it all is, as we know, it's gold and silver. When all financials start to implode, Harry Brown said of permanent strategy, he said, when all paper systems begin to crack at the seams, the rush and the explosiveness in gold and silver just abound. So we have to anticipate that. It's going to be awesome.
There's a lot of examples of that last quote, which we will get into in the next segment. The number 18778 silver, the website guildhallwealth.com. Listeners to our show know that we believe that we are in the midst of a boom in terms of AI and manufacturing, and all of this type of stuff is going to need silver, as well as energy, which is going to need silver. If you want to build a nuclear plant, if you want to build AI processing centers, etc., processor centers, if you want to build solar power and battery cars, and you want the new world and the future and all the good things that come with that, you're going to need stuff. You're going to actually need to build things, and that means physical silver. And Jerry, you brought to the table today an executive order showing exactly where the world is headed.
Oh, a huge presidential action today by 45, 47. Now, this was first reported to us through Eric Doherty. He broke the news to us. He said President Trump just signed an executive order akin to the Manhattan Project that will deploy 40,000 USA scientists and engineers for the rapid advancement of AI over our competitors. We talked about the Manhattan Project, that brief last week, and even weeks before that, months before that, because we know the Manhattan Project very well, where it needed a lot of silver coils for the purpose of creating the nuke. And this is the new race. This is the new space race, and there's new space races towards AI, which requires a lot of the silver. Every single AI data center requires thousands of kilos of silver, and we're just not getting any new silver out of the ground unless they can dig and dig.
Well, keep listening to the show, Jerry. I've got some good news for you on that end.
So here's the section 1 from President Trump. From the founding of our republic, scientific discovery and tech innovation has driven American progress and prosperity. Today, America is in a race for global tech dominance and development of artificial intelligence, an important frontier of scientific discovery and economic growth. To that end, my administration has taken a number of actions to win that race, including issuing multiple executive orders and implementing America's AI Action Plan, which recognizes the need to invest in AI-enabled science to accelerate scientific advancement. I thought this was very much a connection from what we've been talking about over the last few weeks and the importance of acquiring. Yes, it's very important to understand the trends and to know that we are headed towards a more tech-dependent economy. However, you're going to need a lot of the silver to foster this growth. And let's go back to the root of all things. You need to go into the ground to dig it up. So we'll see where this goes and how this affects Canada.
This connects the dots on things that we've discussed on the show for months now, which is that you're going to need silver for all of that. And one of the things that we saw happen is when it became, they called silver a critical metal, critical mineral. Again, that was a signal towards exactly what this executive order is discussing. And that type of growth means jobs. It means growth for the economy. It means lower inflation because you're producing stuff, and that's what you end up needing. You need to lower the amount of money you're going to create or currency you're going to create and actually start producing some things. So that's the potential there, and the potential use for silver is also going to be huge. Now, the thing, though, of course, is that Canada is not partaking in that, seemingly, as of right now. Right now, in actual fact, Canada is getting the raw deal while Mexico is about to boom. And the London China party that we're bankrolling is actually going to be almost over with the start of this deal.
Yes.
Okay? So anybody who is in conservative circles can sense that what's happening with the current party, with their existential threat that they no longer want to or need to discuss, right? This whole existential threat is, well, we're gonna lock it down. We don't believe in what's happening in the United States. We don't, and I don't blame people for not believing it, because you can't believe it until there's a spade in the ground. You
Correct.
Can't believe it until that factory is built and until those people are being hired. And it can't happen overnight. So I don't blame them for that. It's going to take some time. However, Canada is the world's number 3 gold producer and number 5 silver producer. And in the first 6 months of 2025 alone, we shipped over $16 billion of gold to China.
Yes. We talked about that.
We didn't keep it here. We shipped it there. It's a 12% increase year over year. Now, at the same time, Chinese customs say that the real number is closer to 25 billion once you account for the Hong Kong routing game.
Right. Much higher.
Now, silver, another $95 million of raw, unwrought metal in August alone, headed straight into China's EV and solar factories. And what did Canada get back for that? Paper dollars, quote-unquote generational transformation, right? That somehow never transforms into anything but higher debt. Okay? So what this is leaving you with is Canada has no new refineries, no value-added jobs, because we're not producing the solar here. It's the raw materials just getting shipped out of the country. Like, we might as well be some colonial African country in 1880.
Or the cash cow.
Right? We're just ship it out. Our permits are getting stuck with green tape, right? Like, we call it green tape.
Yeah, for the
right?
green.
Not
yeah.
red tape, but green tape.
Yeah,
right?
Some slogan on the tape, some woke ideology.
And we here at Guildhall believe it's because we're vassals for the City of London.
Yeah.
Meanwhile, I don't know if you saw on X this week, but Mexico, the world's number 1 producer, let's take a step back. We've discussed on this show that they were shutting down mining under the same reasons that our country's doing it. That there's green tape, we want to be environmental about this, we need carbon capture, the whole shebang.
But was it?
You're not going to get the silver out of the ground. And all of a sudden it was, well, and that was our story. It was, hey, look, they're locking it down. How can silver not go up from here if they're locking down supply?
Right.
And what has it resulted in? Right? I was listening to Keith Neumeyer from First Majestic. He says they mine 800 million a year, and we're using 1.2 billion. That's a deficit. That means over the 5 years, we've got a 1 billion ounce deficit. Okay? You need that production to come online from Mexico. Well, guess what? Mexico's starting to do it. Mm-hmm. They're actually aligning this goes to your executive order there, Jerry. They're aligning with the Trump-Vance plan. Mine it, refine it, manufacture it, keep it within this, keep it within North America, and help build that race.
Yeah, well, this is this side, the North American side of the Golden Corridor that's already been established in the East. We're just going to link. New payment systems are coming, but you have to lock these resources first and get that output from Mexico. You know, U.S. is in a sandwich between Canada and U.S., who have the silver reserves. And, you know, the USMCA, the restructuring of it all is only going to improve Canada stands, but we just have to get through this hump, cut that tape, and get real. You know,
well,
get to the building and get digging.
Yeah, I'm glad you said that, because what we're tracking here ultimately is that we think that the financialized system that we believe is being sourced from the globalists and Europe, specifically City of London, that this is coming to an end. And this is, you know, you could track the silver leaving the LBMA, the silver leaving all the exchanges, that's a key. The central bank hoarding, if you will. I saw that Turkey bought a whole bunch more, even though their dollar's really suffering. You talked about the benefits of having gold on the books for Russia in the last segment. So Mexico's gearing up for the next leg of a manufacturing boom, right? And we believe that the bankroll of all that financialization is coming to an end as the LBMA is clearing out all of the product. And so central banks are buying. And also, what is this tokenization with Tether, right? They're buying so much silver. They have like 20 tons. Mm-hmm. Like, they're like a central bank now. Mm-hmm. Like, keep an eye on that story, right?
They had to, yep.
Then you add to that what we've talked about with the 50-year gold convertible bond with Judy Shelton. The fact that, and this is what I think everyone needs to really, really take a hard look at, the silver to gold ratio is still 80-1.
80-1.
We're at $50 silver plus, and we're at 80-1 silver to gold. We are so far away from silver being of normal value, let alone overvalue. And the deficit, as we talked about, and the settlement time. So things are getting pretty scary for those who depend on fiat currencies.
Any financials?
And those who are actually stacking, i.e. central banks, manufacturing, et cetera, it's going to be good. So in Canada, though, we don't have any of that.
We don't want any of that.
We have tariffs. We have
taxes.
We have businesses leaving, right? Was it Stellantis? Like, we'll take a $14 billion loan and give $13 billion to the U.S. All the CEOs are waking up and they're going. We believe that this can't last. As we said, the answer to the Lehman problems is not more money printing, more debt. People are going to realize that that's not the answer to anything, because they're going to see physically, anecdotally, that is no longer working. And we believe that it is really just a matter of time before Canada capitulates and joins the sovereignty train. Because the sovereignty train is a winning train. You want manufacturing. Mm-hmm. You want to be able to create things in your country. You want to be able to build the value in your country. If you're going to mine for gold, mine for silver, you want to be able to refine it here and create things with it here.
Yes.
Right? If you have lumber, you want to do things with that lumber here, not just ship the raw material. We don't want the raw deal anymore.
No.
That's the raw deal. Get the raw stuff, ship it away. We don't want that. We want the real deal, the real stuff, built here, made here, using our resources.
Yes. And we want it now. We want this to happen right now, and the quickest, fastest way to get this done is to debank from this imperialist banking system. Once you decouple yourself from these systems with counterparty risk, like treasuries, why treasuries are being dumped and are being moved, and why Tether is tokenizing potentially to the U.S. Treasury. The signs are there. If you have eyes to see, may you see. Because what's happening before us, this is revolutionary. And what's going to happen to your portfolio if you buy into what's happening and set up your own stockpile away from banking schemes, gold schemes that are, held with the government backs. You don't hold your gold and silver in a bank. You don't hold your gold and silver from a government entity in a government entity building. You have to have it independent because you want your independence. And when you need it and when you want it to perform and when you need it for insurance purposes, you can call on it. You want to make the move outside of the system. You want to give us a call. Visit our website, guildhallwealth.com. We visit your family offices. You can get into the market. We have an affiliate program. If you're a consultant or an accountant and have people are asking you, what about gold and silver? We will be that tool in your toolbox to help you and help your clients because they are the most important assets to your book. You want to get in touch with Guildhall and we'll show you how, and we'll grow together with real wealth and real money.
The number 1-877-8-SILVER, the website guildhallwealth.com. The precious metals revolution will not be televised. It will not be shown on mainstream TV, and it will not be in Financial Times. It will not be in The Economist, which we discussed last week.
But it will be on The Real Money Show.
But it will be on The Real Money Show, so stick with us. And what we do here at Guildhall is we focus on actual physical precious metals. We've been in the market for 20 years dealing in physical precious metals. We're here to answer all of your questions, handhold you through the entire process. We help clients open their accounts. We help them with transfers. We help them to acquire their precious metals and tailor something that feels right for them, and also looking ahead to the future of what's going to work for them by holding this product 5-10 years into the future. What's the best way to do it today to ready yourself for then? That's what we do at Guildhall. And everything that we're discussing and all of those signals that we keep seeing everywhere is all coalescing to the fact that there is very little doubt, if any, that the precious metals market and bull market is nascent. It is very young. We've had a great wake up. It's been wonderful for all of our clients, but the best is yet to come. So, Jerry, with that said, let's talk about last week. We were doing a little pushback segment on The Economist, reading an article line by line, not understanding why they were trying to dissuade people from being in the precious metals market. It was just sort of a be warned, precious metals are hot and that should be enough for you to say no.
Time to take
profit. I think that's what it was. We spent like 20 minutes trying to figure it out, but that's what it was. It's hot, so stay away. It's too hot, so stay away. They would never do that if it was Beyond Meat or crypto. But when it came to gold, it's just too hot, don't touch it.
Right. I mean, it was definitely a timely piece for The Economist. And it was definitely a piece that we are dismantling, as well as others in the likes of the Gold Fix and Vince Lancy, and not just them. We have banks and reserve managers, bank managers, Goldman Sachs, now restructuring their portfolios and sort of piggybacking off the last segment where I brought up that we do have an affiliate program to help consultants, accountants, independent financial consultants. To answer questions about gold and silver, to help their clients and customers keep their portfolios relevant, because gold and silver are going to be very relevant moving forward, and you want to piggyback off this and help your clients out. So, this is coming from Gold Fix. Vince Lancy's been doing an excellent job recently. Highly recommend following Vince Lancy and Gold Fix. He reported this big one. We have Deutsche Bank. And Deutsche Bank says the sovereigns today are printing fiat currency to buy gold. Now, this is just it. We have governments, they're beginning to structure their financial plans as these financial planners are doing so as well. Their financial plans are being structured around the volume of the metal they intend to acquire, not regarding price. So they are price insensitive. They just need the ounces. And the issue is not a preference for gold. It is a requirement now for gold. Deutsche Bank said, and this is from Deutsche Bank analyst Michael Sway, He said, reserve managers are positioned to step in as buyers during periods of weakness, a pattern supported by the current structure of global demand that is this. We see elevated official demand is the primary reason behind gold's outperformance versus financial fair value. We'll stop there. The demand is not speculation. The demand is not because of financials and because we're overheated, like The Economist says. It is because gold is outperforming versus financial fair value. The takeaway message, what is financial fair value? According to traditional valuation models, you have real rates, dollar strength, bond yields. Gold should not be as high as it is right now, but it's defying everything because those old metrics are old. It's time to restructure your portfolio, get rid of some of the bonds, get rid of some of the financials, get rid of some of the leverage, and acquire some real hard assets, not the proxy, not the representations of physical gold and silver. But in other words, official global buyers are the reason gold is breaking out. It's traditional correlations. The old is gone. It's shaking off and it's becoming a new asset valuation. And what this ultimately signals is that they're rebuilding a modern version of the monetary gold that it will not easily return to the market once acquired. The accumulation cycle, bottom line is, the accumulation cycle of gold and silver is far from complete. So despite the pundits, despite the narrative that tried to dissuade, like they have been doing since the 60s and 70s, to not own the real thing because they need it for their own stuff. Jeremy, your thoughts on that?
Well, I think you can keep with what you're doing. You can stay in the fiat system. And if we're right, you'll be okay because they'll put gold back into the system. There'll be credibility back into the dollar, and you'll be fine. If you think about having some physical gold as part of your portfolio, then you'll take advantage of that revaluation. You'll take advantage of that reset, which is a process, not an event. And you'll be able to get the gains that we see coming in gold and silver. Now, if you look at the 80-to-1 ratio, you can see, well, hey, if gold goes to 35-to-1 like it did in 2011 or 16-to-1 like it did in 1980. It's like, oh, we're at $50 silver. Yeah, but the ratio in 1980 was 16-to-1. Mm-hmm. We're not at 16-to-1. We're at 80-to-1.
Big sign.
That's silver going to multiple hundreds of dollars, which is not expensive in this world at all. You go for lunch. You know, your lunch used to cost you $8. Now it costs you $18, mm-hmm. right?
Compared
and
to of
course they're importing, all that immigration to suppress your hourly wages that we used to just ship to build things somewhere else. Mm-hmm. Like, come on, you don't need to be an economist to see which way the wind is blowing here, right?
Right.
You can own physical gold and silver and take advantage of the revaluing. And we believe, forget what we believe. If you go with what the banks are saying, you're looking at $4,500 within the next 6 months. Some are saying $5,000 next year. That puts silver into the probably $65 range, up $15 from here, easy. And that's just the beginning. Now, those are the conservative estimates. You could go to the wacko investments of people who have done the math, but it's just too difficult to conceive, right? Mm-hmm. Of gold going to 15,000 or whatnot. But somewhere in between over the next 5 years, if you add 15% to gold over the next 5 years, Jerry, you're already at $8,000 an ounce. So why not have some to take advantage and understand that there's no counterparty risk in the physical and that it's an asset, it's not paper. So we don't know what's going to happen to paper over the next several years. We don't know if the value of the dollar sinks before it's saved.
Right.
That's why it's important that we believe to stack and be positioned for the success that's coming with our new space race, for instance, the new revaluation, for instance. And at Guildhall, we handle only physical gold and silver that's globally recognized for ease of liquidity. Take advantage of the market. Stick with us. There's a lot of success ahead. So the number 18778-SILVER, the website guildhallwealth.com. It's okay to have some equities. We all do mining stocks here. We all have some equity investments. But man, the physical metals have done well over the last several years. It's been a great thing to own. One of the things I find myself mentioning to clients, Jerry, is we always said it was undervalued. We just never realized just how undervalued it really was. and it you know, you never know what you have until it's gone.
I know.
And $18 silver is gone, and man, we miss those days. I wish I could go back and stack more. However, if you feel that way, the way I do, then you look forward and you say, if I felt that way about, you know, $18,000 gold, I should definitely be feeling that way about $4,000 gold, because it's only going to get more crazy from here. Speaking of crazy, you have an article about some stuff that they're trying to push potentially in Italy. Do you want to tell us a little bit about that?
This is crazy. So it's a story that broke by Reuters. So Italy drafted in their budget, they outlined a potential 12.5% substitute levy that would allow households to formally declare their bullion. So this is crazy. So not only are you going to get taxed later on for capital gains, they're saying this levy is going to reduce your taxes later on. So pay the 12.5%. It's a big cash grab, but it's also declaring your privacy. And this is a monetary scheme, a gold scheme that people are, you know, considering. But I think those who hold gold understand that this is a scheme by the government, that they're not going to volunteer their gold and silver. But because gold is a monetary asset that sits outside of the reach of the banking system, the political cycle, and this levy by Italy, I was very surprised because, you know, when you see, you know, the President Meloni, she does, you know, some really good things, but this just didn't seem like one of those. Why are you telling the people to volunteer? You know, show them where you got it from, show some records, declare it, and they're going to put literally a stamp on your gold and silver. The bottom line is they're trying to reshape this relationship between the individual and the state around the last forms of privacy, private money left in Europe.
Well, it must be, I don't think it was her. I think you can see where this is headed. It would be factions within the political parties in Italy following with the globalists, following the World Economic Forum, and attempting to try to shuffle this in.
Yeah, well,
it's a proposal. It's not a guarantee. But listen to this. In 1933, when they technically made gold illegal, right, in the United States, you know, only 30% complied.
What about today?
Well, today, the thing is people don't really own it. You know, you would
but
think
those who do have guns.
Yeah. You know, when you kind of remind yourself when you're speaking to clients that it's such a minority. We're in such a minority of those who actually own it. Right? They're not confiscating your ETF. Okay? They're not confiscating. Yeah. Your pool account? No. You can keep that.
That's a beautiful NFT.
Yeah. Keep it. Keep it. We're gonna auction off this Gustav Klimt for more money than is ever seen in the world, which they did last week, and they auctioned off that famous Japanese wave.
Yeah.
For like $3 million. It must be tiny for $3 million that it sold for that.
It must be.
Yeah, people want stuff. People want stuff, and that's where I think the natural fancy colored diamonds will come into play as well. Rare, beautiful. They're gonna, you know, when all of these mines get to go full force in Canada, and we get to refine it as well, and we get to do things with it, right? When we realize that the name of the game for our success is to actually do things and give up on these ideological pursuits and not, you know, I worked with this guy once. I worked at this like Kelsey's, okay, on the line making, you know, club sandwiches and
hard work
and hot wings, stuff.
Oh, I'm hungry.
And he used to just chat and the one thing, I don't remember any conversation. I remember he said this. He goes, "A promise is comfort to a fool." I go, "Yep, that always stuck with me." If you're believing promises, if you're not seeing what's happening the way we're presenting it here, where we're showing you this is happening, this is happening, this is happening. These aren't promises. These are happening. Tether buying 20 tons of gold is happening. You know, these countries accumulating gold, it's happening. But we have so far to go, and we have a lot of success that we can make in this market. So we're very excited for people to own the metals today.
You do. It's, you know, it's these assets that nations, banks now are turning to when the liquidity weakens. And Russia revealed that their gold operations have dramatically improved their national liquidity. It will do that for yourself. It will do that for our own banks. It's confirmation that gold is functioning right now as the funding backstop for stressed sovereign balance sheets. The U.S. balance sheet is stressed, and central banks understand this. Companies understand this. You need to as well, because global gold buying is going to continue to be at insatiable high levels. They're at all times right now, but it's going to continue. Repo stress, this is not a technical footnote. It's the first crack in the system. Liquidity injections are coming. December 10th, 80% of traders expect cuts, expect that helicopter money, expect more repo liquidity until it doesn't work anymore. It's like viscosity breakdown in your engine without oil. Those pistons come to a halt and crack. And when it cracks, the solution's going to be around the corner waiting. That Gold Standard Restoration Act has been sitting there tabled 2 years ago. Gold and silver are not just safe havens. They're becoming, and they have become, the only collateral that works today. So give us a call. We are your source for high-quality liquid assets. GuildhallWealth.com, the number 18778-SILVER.
Well, we said it all.
Hopefully.
If you've missed an episode, catch us on YouTube, catch us on Rumble. We're on Spotify, iTunes. You can go direct to the global website as well to catch the show. And that's it. That does another episode of The Real Money Show. Next week, we'll give you more examples of the reasons to be involved in the gold and silver market. But of course, if you want to hold physical gold or silver in your registered account, like your RSP, Lira, LIF, RIF, TFSA, etc., you can give us a call at 1-877-8-SILVER. You can go to the website, guildhallwealth.com. Thank you so much for spending a little bit of time with us, and we can't wait to speak to you next week here on The Real Money Show on 640 Toronto.